You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back to Real Talk Texas. Today in the studio, we've got Carl Stanley, and Carl's with Rising Point Solutions, and they're a credit restoration company based in Grapevine, Texas, and they're A-rated, right, Carl, by the Better Business Bureau?
Yes, sir, A+.
Okay. And one of the things we do at Real Talk Texas when we bring a real expert like Carl on the show is we vet them out, make sure that they are truly an expert in their field that we're having you on the show and talking about. And before the break, we were talking about making sure that if you've got that number to text, and if you're listening in, stay tuned because we're going to give you a number to text the show again if you need some help or you're wondering if your credit score can go up and things like that, so that you can get a better deal on your mortgage or your auto loan or anything else, any other type of credit that you're looking to establish. But one of the things we talked about, Carl, before we went to break was you guys offer a free consultation, right? I mean, I don't have to pay to come in and sit down with you.
No, you don't. The free consultation that we offer for consumers is that we're going to sit down with them. We're going to help them obtain a free copy of their credit report if they don't already have one. We're going to sit down with them. We're going to go through their credit report top to bottom with them and help them identify all the problem areas and potential solutions and whether we think that our program would be that potential solution. And in most cases, and I did want to clarify this from the last segment, but in most cases, we're going to be able to help the consumer. There are a few specific circumstances that are a little bit out of our realm of expertise, but for most consumers, we're going to be able to help them achieve the goals that they want to. But we're going to sit down with them, go through that credit report, make sure they understand the process, and spend about an hour with them and get them comfortable with how everything works, and just make sure it's a good fit.
Well, Carl, one of the things, as a mortgage professional, I've been doing this since 1999, so I've seen a lot of different things, and I know bad things happen to good people, and so we always try to give them a solution, a way to go forward, rather than just say no. We say no, not right now, but here's the things you need to do. Maybe it's they need to save some more money. Maybe they need to get some credit repair done. Maybe it's they need to establish credit. What do you do when you sit down with somebody and, I've seen this before where people say, I let my credit cards get out of control, and so I just paid them all off and I closed my accounts. And right. That's when I tell them, wait, time out. You can pay them off, put them in a safe deposit box or something like that, but don't close them. You might want to give our listeners a little bit of advice about, that situation.
Well, I think that the natural reaction from a consumer is when they get into financial trouble is to shut down. And I've seen it a million times where people who've been through credit troubles before, they've had debt problems and got overwhelmed with their finances, have decided just to close everything, shut everything down, and kind of withdraw from the whole world of credit altogether, go on a cash basis. And although it might be a solution to the problem at the time, for long-term credit health, it's not a really good idea. So, we're going to sit down with the customer and, explain these things to them and how the credit system works, because there's a lot of misconceptions out there of how the scoring model works. If you have credit cards that have been open for a long time and serviced good, and you get into some financial trouble and you start closing down all of these accounts, then your credit score is going to drop fast and a lot. So, and that's just one of many, many misconceptions that consumers have about credit. So, I think it's really important to educate our customers when they come into the program on what to do and what not to do.
Well, I think, from a mortgage standpoint, the thing, I preach this to my family all the time with Scott, Sean, and Courtney. When they first got out of high school, they're getting all these, college type of credit cards and things like that. And they asked me, Dad, hey, should I open these up? And what I've always recommended to my children is, yes, you need 3 trade lines to establish credit. So when you graduate from college, you have a better shot of being able to qualify for a mortgage when you're ready to go out in the working world and all that stuff. So typically, each one of my children have 3 credit cards, and Dad holds them, right. Or I'll give them one to use for an emergency or something like that. But the idea there is that, you charge a little something on it to activate it, and then you just really keep those balances around zero all the time. So that account's been open for 4 years. When they get ready to graduate from college, they actually have established a credit score. Where versus other people I've talked to that say, you can't pay your own bills yet, so don't have a credit card yet.
Now, I think it's important for young people to establish credit responsibility at an early age. I talk to people all the time who have gone to that cash-only basis, or they've shut down their credit cards, and they ask me, why do I have to have debt to have good credit? And the answer is, you don't have to have debt to have good credit. You have to have credit to have good credit. And what I mean by that is, if you shut down everything, you don't have any credit. You're not showing any responsibility of servicing debt or responsibility of on-time payments. And that's what lenders look for when you're applying for something. So, if everybody was independently wealthy and could go on a cash-only basis, that's great. But you have to maintain, and 3 is a good number, you have to maintain at least 2 or 3 good open revolving accounts, so that when the time does come that you do need your credit, whether it's for an emergency or a student loan or whatever you're trying to use your credit for, that you have that good history on there and have a good credit score so that you're going to get the best deal and the best interest rate on whatever you're trying to do.
And the biggest thing that people don't understand about that is, the difference in my mortgage rate that I can offer somebody with a 740 credit score versus somebody with a 680 or a 660 or a 620 or below is very different. It can be as much as, a full 1% in interest rate. And that means a lot to your mortgage payment when you're getting ready to make that payment. And I know the auto industry works the same way. So your car loan could be I had someone that's basically we're purchasing a home right now, and I've got a good friend that works for a credit union that does a great job on auto loans. And she just gave this client a 2.29 refinance on their car, lowered his car payment from $699 to like $350, so he qualifies to get his home. And it was a great thing because he had 780 credit scores, and it's a big difference. I think if he had in the low sixes, he would be paying like 7.9. I don't think we could have helped him out.
Right. The interest rates that you get on credit cards, homes, car insurance rates, everything is based on credit nowadays. We have people coming to us who want to get security clearance or become an FBI agent. Credit is everything nowadays, and your credit profile is a reflection of you. And our goal with our clients is to help them save money in every area of their life, not just to get a home loan, but to save on those cars and save on their car insurance. And for the average consumer, you're right. The difference between having a 720 credit score versus a 620 credit score could mean tens of thousands of dollars in interest and fees in all areas of their lives, not to mention potential employment, security clearance, and other types of things that are not even related to financing. So it's very, very important that people constantly stay on their credit and make sure that it's in an area that's going to serve them well.
Well, if you've just tuned in, you're listening to KLIF. This is Steve Hakes with Real Talk Texas. And in the studio today, we've got Carl Stanley of Rising Point Solutions of Grapevine, Texas. Carl's an expert in the credit field. And if you want some help, just grab your cell phone, put in this number, 817-925-2546. That's 817-925-2546. And just text the word credit, and we'll put you in touch with Carl and his team there in Rising Point Solutions. So, Carl, if let's just say I've got credit and I've had some credit cards, but, I was paying everything online, or I switched from writing a check to paying online, and I did have a late payment on one of my credit cards, or maybe it was several. Maybe I was in the middle of a move or something like that. What can you do for us consumers if we've got an issue where we had a mistake or something like that?
Well, there's lots of different types of mistakes on credit reports. It could be, or there's lots of different types of negative credit. It could be late payments. It could be collections. It could be charge-offs, public records. Whatever the situation is, we're going to sit down with the consumer and figure out the best course of action. Late payments are a score killer. Late payments are the worst thing that can happen to your credit, because your credit score is really derived by what's happened recently, not the totality of what's on the credit report. a lot of people don't realize that a medical collection or even a cell phone collection that's only a couple months old is going to impact your score a lot worse than a bankruptcy that may be on your credit report from 2 or 3 years old. So we're going to take a total view of that credit report and figure out what is the best way to help our clients get the highest credit score possible in the shortest amount of time. And I'll be honest with you, late payments are a tough one. Late payments are that's the number one thing that we tell all of our clients, both before they come in the program and during their time in the program, is do not make any late payments. So it's a tough situation, but yes, late payments can drop your score 50, 60, 80, even 100 points, depending on what account you made a late payment on.
And it's kind of, it's like I always say, bad things happen to good people too. And, I've seen a lot where we've had people that were moving from one apartment to another apartment, and it's like that inevitable Time Warner Cable or Verizon cable bill that they didn't turn in their box, and they didn't communicate with them because they moved, and all of a sudden they got this collection for a couple $100 on their report, and that really makes it difficult for me. After this break that we're going to go on to right now, we're going to bring Carl back, and we're going to ask him, specifically what he can do for you out there if you're listening and you're trying to make sure you have excellent credit or the best credit you can have. Rising Point Solutions is the company. They're based in Grapevine, Texas. Carl Stanley is in our studio today, so stay tuned.